right, so let's start off with some global economics. We have IMF here, and they're talking about the global recovery gap widening on unequal vaccine access. So what they're pretty much talking about in the first half of this article is some growth projections that they had, and they're still expecting the world output to grow by 6% in 2021, following last year's 3.2% drop. And they're specifically mentioning the UK. We've seen that the UK has been a leader when it comes to reopening their economy, when it comes to mass vaccination. So they've been doing great so far when it comes to that. The UK got the biggest bump among major economies, with the IMF now forecasting a growth rate of 7% in 2021, which is just a little bit lower than what Bank of England estimates. But the more important part is coming down into the second half of the article, where they're talking about they've already warned a dangerous divergence, and now they're seeing that the divergence is getting worse. And it's mainly between those countries that have already vaccinated a majority of their population versus those countries who are barely even getting the appropriate supply of the vaccines. So there's a lot of countries, mostly they're talking about advanced economies, that are on track to reopen their economies, while others are still struggling with even getting the supplies and then vaccinating a majority of their population. So in order to address this problem, what the IMF is suggesting to advanced economies to do is those economies who have already vaccinated about 40% of their population should share their vaccine surplus with the less developed countries. That way, those economies that cannot afford to get more vaccines, or they're not able to get their hands on more vaccine supplies for whatever reasons, have pretty much this chance of catching up with the rest of the world economy when it comes, or recovery in general, world recovery, being able to catch up with that and being able to have a chance to reopen their economy with the rest of the world. As we continue down, they're talking about how the fund has proposed a $50 billion plan to end the pandemic. And then, you have some other key points here. But the main point is, unless these economies are able to share their vaccines with less developed countries, we have this possibility of still new variants continuing to emerge, continue to threaten the economic stability of countries across the world, and still risk any global economic growth. So that's why we need the countries to pretty much come together, the advanced economies and currently developing economies to come together and pretty much help the poorer countries in order to get more vaccine and vaccinate their people. Again, if you guys have any questions, just go ahead and put it into the chat and I'll take a look. Now we're going to move on to the UK. So now we're starting to see, Kyle, this is the question that you asked. So it was pretty much related to this as well. So if you're looking at any indicators of, and I'll go ahead and repeat it here, the same exact question that you had. If you're looking for an indicator when it comes to COVID death, then you want to make sure that you're understanding that COVID death is related to the previous confirmed cases from the past couple of weeks or from the past couple of months, right? So the death rate itself is a lagging indicator when it comes to confirmed cases. And then when you look at the confirmed cases right now, the daily confirmed cases, that's more of your leading indicator, because some days you're going to have more cases being reported, some days you're going to have less cases being reported. But what you want to pay attention to is, what's the average like? Is the average increasing compared to the previous months, or is the average decreasing? And that's going to kind of tell you where is that country specifically sitting at the moment.
Thanks.
Yeah, absolutely. So right now what we're seeing is that COVID death rates are increasing in the UK as officials warn that the pandemic isn't over. So this is coming right back to what I pretty much just said right now. These death rates are related to the confirmed cases from the past couple of months before they reopened the economy, right? So right now, on June 19th, when they reopened the economy, they still don't have enough cases in order to make a statement on whether or not reopening the economy is playing into the new confirmed cases that they're seeing. So at the moment, what they're seeing is low confirmed cases, but high death cases. So there's that gap between the two, and it says an increase is consistent with the lag between infections and serious illness from COVID-19. It's still very early to say whether or not the reopening the economy is contributing to the increased death rates, but whatever cases that we're going to see right now from the daily confirmed cases, we want to be paying attention to the average overall. So we're going to continue to see high numbers overall. We're going to start to see fluctuating numbers, but this already was discussed by the government when the news about reopening the economy was disclosed. So the sentiment was already put out that, hey, we know that, there's going to be maybe a little bit of increased pressure. We understand that as the economy opens up. But as we're lifting up all the restrictions on a federal level, we're still urging the population to be cautious, to continue the precautions that they've already been taking, wearing the mask where they can, and also socially distancing as they can, right? So this is what we're seeing right now. We're just seeing the effects of that. But overall, they're seeing that the daily cases are decreasing at the moment, but still it's way too early to say that if the lifting of restrictions is playing into the current numbers that they're saying or not. So it's going to still take them a couple of weeks before lower case numbers translate into easing pressure onto the National Health Service. This is the same exact thing that we're going to see onto this next article, where PM Johnson and other government officials are coming out and they're still telling the public to remain cautious of the new variant, not to immediately drop all the precautions, like wearing the mask or socially distancing and all that stuff, and then going right back to their normal lifestyle, right? They're saying that still be cautious and all of that stuff. And they're still saying the same exact thing in this article, that the latest data doesn't yet reflect the impact of lifting virtually all pandemic restrictions in England on July 19th. So there's still a lag between the infections and the hospitalization rates at the moment. And it's going to take them a couple of weeks before these lower case numbers translate into easing pressure onto the National Health Service. And that's pretty much what this entire article is about. And now we're going to go ahead and move on to Brexit. If you guys are just joining in, I'll go ahead and just repeat it. If you have any questions, just go ahead and put it into the chat, and I'll go ahead and get to that shortly. Now moving on to Brexit. So we're starting to see some tensions rising between the EU and the UK as well in the past couple of weeks. So just loosely to explain, what's going on now is the UK wanted to renegotiate some terms related to Northern Ireland because the requirement of checking goods was harming the already slow recovery of the UK. So when the UK brought that up to the EU and they wanted to renegotiate, the EU refused, and the UK in turn threatened to invoke Article 16. Article 16, I chose this website, but you can go on, just type in Article 16 Brexit. But I chose this one because this explains it very well. Article 16 is a safeguard clause that's part of the Northern Ireland Protocol. And this is saying that if any of the terms in the Brexit deal or in the Northern Ireland Protocol are affecting one of the party in a negative way, and they said it specifically, if we continue down here, they say to a serious economic, societal, or environmental difficulties that are liable to persist or to diversion of trade, then one of the parties can go ahead and invoke Article 16, which means that they can suspend some parts of the protocol here. But obviously, if one party does that, then the other gets a chance to respond. So the UK threatened the EU that, okay, well, if you don't want to renegotiate, then we're going to go ahead and invoke Article 16. In turn, the EU threatened the UK with a lawsuit. They're saying that if you do that, then we're going to go ahead and file a lawsuit against you. And they were also talking about going to the European Court of Justice. And now we're getting news that the EU is pausing the threat of legal action against the UK over Brexit deal. One thing that's not mentioned in the article here, but if you do look it up, there are previous articles. I just didn't pull that up right now because it's a little bit dated, a couple of days ago. But one of the things is that the EU is still trying to work on its relationship with the UK so they can have a better post-Brexit relationship with their neighbor. Another thing here is now the reason why they paused this threat is because they're trying to work out the differences with the UK. So the two parties, they're going to be using the entire summer to find technical solutions to any of renegotiation requests that the UK is bringing up now to the EU, because now the Northern Ireland Protocol, for example, is one, and there's a couple of other parts of this Brexit deal that's affecting the UK's economy, right? It's not letting them grow their economy because of the pandemic, because of whatever's happening with Brexit, because of, you know, a lot of the backup that's happening on the borders and things like that. So that was like briefly explained, but that's pretty much what we're seeing now when it comes to Brexit. So overall, when we're just looking at GBP news, all of this was just simply GBP news. We're starting to see a little bit of uncertainty, and we're starting to see a little bit of underlying market fear when it comes to COVID and when it comes to Brexit. With COVID, the daily confirmed cases, they're starting to decrease a little bit, but the death rate is still increasing, right? Because of the previous confirmed cases before they reopen the economy. The uncertainty comes from the fact that they don't know whether lifting up the restrictions is actually going to play into more cases or more confirmed cases in the following weeks. Another uncertainty is the EU is still pausing the legal action, but at the end of the article here, they say that they're not going to renegotiate the protocol, but will continue to discuss its implementation. So they're not still going to renegotiate anything that the UK is requesting, but they're just going to see a way around it to see, like, you know, how can they help out the UK? But there's still a lot of uncertainty around it. There's a very high chance that they might not even come to an agreement because the EU simply refuses to renegotiate any of the terms related to the Northern Ireland Protocol, and that in turn is already affecting the UK's slow recovery. Everyone good on the GBP news?
Yes.
All right, fantastic. So now we're going to go on to Japan. So we're starting to see more COVID cases related in Tokyo itself, related to Olympics. So we're starting to see 16 more coronavirus cases. They actually have a chart down here if you're more interested in that. So it tells you, depending on, like, you know, the people, where the COVID cases are. Majority of it seems to be from the contractors and the Olympics personnel. And then now you're starting to see a little bit of increase in athletes as well. So the sentiment overall here is that many residents of Japan had already opposed the staging of the games amid the pandemic, fearing that the arrival of tens of thousands of athletes and others from around the world could make for a super spreader event. So they were already scared about that, many residents in Japan. And then as we continue down, we're starting to see that some experts were also uneasy about the effects of the game on the spread of the virus. So we're already seeing that a lot of the cases related to Olympics are increasing, and potentially, you know, in the next couple of weeks or so, maybe a couple of months, we might even see the death rate increasing as well. So right now, we're starting to see that there is some fear. There is still some uncertainty due to the increase of cases related to the Olympics, even though the Olympics are still spectator free. So that was more of the macroeconomic side. We're going to move on to the economic calendar here. So this week we started off pretty easy. So we did have a couple of more important news, NPC members speaking, but again, that was more towards reframing some of the previous things that he's already talked about. I believe this was his last speech as an NPC member, so that's all he was pretty much talking about, and reframing some things when it comes to Bank of England. So not too much that's going to affect the markets heavily. And then you have BOG governor speaking, and he was mostly speaking about climate change as well. So when you click on these folders, you can click on latest release. It'll take you directly to their website, and he was talking about climate change here. So pretty easy start so far. And then as we continue down, we had consumer confidence coming out of the US today. And then tomorrow we have interest rates coming out. So in tomorrow's New York session, we're probably going to see a little bit of a slow session. We're probably going to see a lot more movement actually in London session tonight, but we're going to be paying more attention to interest rates tomorrow. So you may potentially see the market consolidating a little bit. So I wouldn't worry too much about it, but I'm paying more attention to those daily timeframe levels that we're going to discuss shortly. So you have interest rates coming out, and then you have, if you're trading CAD, then you're going to have CPI news coming out right when New York opens up. And then as we continue down, you have a little bit of more GBP news coming out, very low impact, but I would highly suggest go back to the previous webinar that we just did, take a look at that and understand, like, how would you trade this news, right? So that's what we covered in the previous webinar. And then also, as soon as the market opens up, you have GDP news coming out, which is very important. This is also something that we covered in the previous webinar. And then you have unemployment claims, which we trade every Thursday anyways. And then as you go into Friday, you have a lot of Euro news coming out. So if you're trading Euro USD, Euro JPY, you want to be paying attention to Friday's London session due to the fundamentals. And then also the New York session on Friday is going to be very fundamental heavy as well. Some of the core important things that you want to be paying attention to is probably the PCE price index. So that's the personal consumption expenditure you want to be paying attention to. The next thing is the consumer sentiment and inflation expectations. So these are the key things that kind of turn into some of the higher impact news. And then next week, we're going to have NFP. So get ready for that as well. Just review the unemployment claims data and any unemployment related data coming out this month overall. So just go back, just come down here, just click on this folder here, just review the data that came out this month so far. We've been quite negative. So we have been seeing negative or unemployment claims increasing in general. So that's one thing that you want to pay attention to. And then next week, you're going to see a lot of unemployment data coming out. So use that as well. I have the fundamentals here listed out for you guys. We're going to start off, actually, let's start off with the monthly time frame here. And I'll pull that over here. So on the monthly time frame, what we have is that monthly resistance. And now the new monthly candle started to break the low. And I'll show you guys a very interesting point here that I'm personally watching out for on the daily time frame. This is the 156 level. So you got 156, and then an interesting level is we came back down. So this was one of the levels that Stefanos and I pointed out in the previous 2 to 3 weekly outlooks, and price came right back down to about 148,500 this month, tapped right into that, rejected it, and then now it's pushing up. The reason why this is kind of interesting is because I'm going to create a zone here, and then as we drop down to lower time frames, I want you guys to pay attention to how this is a very important liquidity zone. So the market's pretty much grabbing liquidity, and now we're pushing right back up. Another level that I want you to pay attention to here is going to be that minor resistance that price is creating right about here, and then see how price is just cutting through it. That was another resistance, respected as resistance, major top wick rejection before price started consolidating below 148,500, and then same exact thing here. Right, so these are some key areas that you want to be paying attention to as you drop down to the daily time frame level, and then even, weekly or 4-hour or any of those. So last week we closed with a major bottom wick rejection, pulled right back up, closed bullish, specifically above this area right here. Now we're pushing back up. In order for me to look for any buy opportunities, I need to see some sort of a break and retest formation, maybe on the hourly or 4-hour time frame above the 152,700. If I get that, then I'm looking for a nice trade to the upside for potentially about 100 pips coming up to 153,800, and then continuation back up to about 156 flat for a total of 300 pip move. Right, so that's definitely something that we can see, but we need to see this 152,700 area clear out first, and then continuation back up. If price is pretty much stuck in this area, we do not have a trade opportunity, but if price can break below the zone and continue back down, then we can look for a sell opportunity, which is pretty much going to come and fill the wick here for about 178 pips, and then continuation down for another 300 pips almost. So this right here is a no trade zone. This is the key area that we need price to continue down from for any sell opportunities, and we need price to continue above 152,700 for any buy opportunities. So this here is a no trade zone. Right now, the market is still testing this entire bearish structure that we have here. We're still testing that. A break above this is a break of that bearish structure on the daily time frame, and then we can look for clear buy opportunities coming back up, which is another key area right about here. So coming back to here, first area of target, and then the final one is going to be up top here. But if price does not clear above this, we just get a nice little push up, and then maybe price comes right back down, something like this, then we don't have any buy opportunities. We need to see a clear break and retest formation in order for us to look for any buy opportunities to the upside, or we need to see price clear below this zone here and then a continuation back down. Because if you look on the daily time frame as well, all of this is simply consolidation. You drop down to the 4-hour, nothing but simple consolidation in this entire area. So you've had consolidation here before, you've had consolidation here as well. You have a little bit of fake outs happening here, price respecting the same exact area as resistance. And now that's the same exact thing that we're doing here. So this here is a no trade zone. Buys only above 152,700 with a break and retest at least on the 4-hour or the 1-hour time frame. And then same exact thing here. I need to see some sort of break and retest. Something like this, I'm completely fine with as well. So this is what I'm looking for, and then continuation down, 300 pip move to the downside, 300 pip move to the upside here as well. Now we're going to move on to gold. So we have the fundamentals right about here for you guys. I'll actually move that down here. There you go. So now looking at this, we have, first of all, the major resistance up top here, which is, let's do 1980 flat. 1980, you've got another one, 1900, which is the liquidity zone here. So 1900 flat. And that's the same exact area that price rejected back in 2011. And then same exact thing here, we're still rejecting it. And then this is the next level that would mark off, which is 1770. So anything below that, obviously we're going to come back down to 1680. That would be the next level. But that 1770 area is a more important level. As we can see, price has created support here and then also created that resistance back up here as well. And then I'll bring the fundamentals back up. So on the weekly time frame, what we're starting to see is still that bearish momentum to the downside still being respected. Two things that I'm really watching out for is, one thing, the very first thing is this was the clear bearish structure here, right? Price broke out of that, so and then came back up to about 1900, grabbed that liquidity from up top here, and then came right back down in a massive sell. So either this pull back here is simply a retest of the structure to correct this entire bullish move up. As you can see, we only had a little bit of consolidation down here. That's about it. And then a massive push up from there. So this entire move could simply be a correction of the bullish push up, or price is still respecting that bearish move down and we're going to continue down. So that's why that 1770 area is a very important area, because if price rejects this and continues bullish from here, then we have great buy opportunities. As of the weekly time frame, what we're looking at is price to break above 1812, or you can do 1815. I would personally do 1815, just so we can clear out all this area that's price is consolidating above. So if price can break above this and continue bullish, then the next stop for us is going to be 1900, 1860, and then 1900. If price does not break above this, as you can see in the past couple of weeks, we made a massive top wick rejection, closed like almost a doji. The next week, so last week, we made a top wick rejection but came back down and broke the previous weekly low. Well, now with the new week, we're just making a top wick rejection, so I want to see if price is going to continue back down. So this is going to be another key area that we're going to see on the daily time frame right about here. So if price breaks below this and continues down, there's a very high chance we're going to come back down to visit 1770, right? And that's going to be our sell opportunity. And at that point, you're going to probably secure a majority of your trade, and you could let the rest run and see if price is going to come back down to revisit 1680, which we saw on the yearly time frame is the massive bottom wick rejection that price made down here, right? So those are some of our options that we're looking at, but obviously we need to wait until this zone here is broken, or if price is going to break above 1815. As you drop down to the daily time frame, price pull back down right into that huge liquidity area. Look at how many times price has rejected this zone, created a support here, and it seems like it wants to push back up. This entire area for me at the moment is again a no trade zone. It's all liquidity area here, right? And then if price breaks above this, then we're looking for buy opportunities to the upside, 1860, and then looking at 1900. So if we're looking for a sell entry here, then I want to see price clearing below the zone here, breaking these wicks, and we're looking for some sort of break and retest formation on the 4-hour time frame down here. See how all of this is consolidation? So I want to see price break clearly below, I would say about 1796 or 1795, clear below these wicks, and then a continuation back down. Your TP1 most likely is going to be down here at 1785. This is when you're going completely risk-free. And then 1770 is going to be your next partial area where you're going to close out majority of your trade, trail your stop loss, and then you can let the rest of your trade run down to about 1680, which is all the way down here. But obviously you would start to look for some more entries down here as price gives you breaks and retests or gives you any retracements. Absolutely. So that was the breakdown for gold. Does anyone have any questions whatsoever? And these are your fundamentals that you're looking out for.